Welcome to Day Trading Psychology. If you've ever found yourself selling a good stock too early, you're not alone. In the world of day trading, this is one of the most common and most painful mistakes. Every trader dreams of catching that perfect move, the kind that runs for days, even weeks. But when it finally happens, when the chart starts to rise beautifully in your favor, fear begins to whisper. You see your profits grow and suddenly, you start imagining them disappearing. You think, what if it drops now? What if I lose everything I've just made? And that's when you hit the sell button. Moments later, you watch the stock continue to climb, and that feeling, that deep, hollow regret, is what every day trader knows too well. The reason traders sell too early has almost nothing to do with charts or indicators. It's about psychology, pure, raw emotion. Fear of loss is the strongest emotion in trading. When your position is green, that unrealized profit feels fragile, like a soap bubble you're afraid to touch. You've been trained by pain. Every time you held too long in the past, you probably gave profits back. So now, your brain learns, take the money, lock it in, don't get greedy. You hear that voice saying, no one ever went broke taking profits. And it feels wise, until you realize that, over time, it kills your edge. Because in trading, and in life, you can't get rich by cutting every flower before it blooms. Selling early gives the illusion of control. You feel smart, disciplined, safe. But the truth is, most of the time, it's fear wearing the mask of discipline. You tell yourself you're being rational, but what's really happening is emotional discomfort. Your heart rate increases when you see your profit move up and down. You can't stand watching a small retracement. It feels like pain. So you trade not to make money, but to avoid discomfort. That's the invisible trap every day trading journey must go through, learning to stay calm in the middle of market chaos. Selling too early doesn't just cost you potential profits, it damages your mindset, because after you sell, something worse happens. You watch the market continue higher without you. Now your mind starts playing games. You feel regret, frustration, and a sudden urge to get back in. You chase the move at a higher price, right near the top. Or worse, you start shorting against the trend, trying to make back what you think you lost. This emotional roller coaster, from fear to regret to revenge, is how most day traders lose their accounts, not by bad analysis, but by bad state management. Another reason traders sell too early is external noise, news, rumors, fear headlines, a negative article, a market tweet, a red candle on the index, and suddenly, panic. They forget the plan. They forget that markets breathe. They expand, contract, then continue. A good stock with strong momentum can handle temporary bad news, but the human mind can't. So traders sell not because the setup is invalid, but because they let someone else's fear infect their own decision. That's why learning how to day trade is not just about entries or indicators, it's about emotional immunity. Every trader knows the rule, let your winners run. Yet few can actually do it. Why? Because letting profits run means giving up control, allowing the market to test your patience and ego. In day trading stocks, or day trading crypto, or day trading forex, it's all the same. You'll only catch big winners when you stop trying to control every tick. The professionals don't hold because they know what will happen. They hold because they've accepted that they don't. They trust their edge. They trust probability. They trust that even if this trade pulls back, the system over time will reward discipline, not fear. That's the mindset shift that separates amateurs from pros. Every beginner trader wants consistency. They think consistency means avoiding pain. But in reality, growth requires emotional discomfort. You'll never reach mastery in day trading until you can sit through temporary uncertainty, because every big move, every life-changing trade, requires you to hold while your emotions scream, get out. The goal is not to be fearless. The goal is to be aware of your fear and still act according to plan. That's the essence of trading psychology. That's the inner war every trader must fight alone. So how do you stop selling too early? You start by understanding that the market doesn't care about your comfort. Here's the process professionals use. 1. Define your exit before you enter. Know your stop, your target, and your trailing logic. Once you're in, the decision is over. Let your plan work. 2. Expect the pullback. Every strong trend retraces. It's part of the rhythm. The pullback isn't danger. It's the breath before continuation. 3. Focus on process, not outcome. When you detach from the need to win this trade, you start winning over time. 4. Practice emotional stillness, meditation, exercise, mindfulness. Whatever centers you, use it. Because your nervous system is your real trading account. Remember, learning how to day trade isn't just about charts, it's about training your body and mind to stay still when everything inside you wants to react. Let's go deeper. The urge to sell early is rooted in scarcity. You fear losing because deep down, you don't fully trust yourself yet. You don't trust your discipline, your plan, your ability to handle uncertainty. But trading mastery begins the moment you stop chasing certainty. Because certainty doesn't exist, only probability does. When you truly understand that, you stop trying to be right and you start trying to trade well. Whether you're learning how to trade crypto, how to trade stocks, or how to trade forex, this principle never changes. Markets reward patience, not panic. A good trade will often test you emotionally before it pays you financially. The best moves are uncomfortable. They require waiting, enduring, believing in your edge. That's why 95% of traders sell too early. Not because their analysis is wrong, but because their emotions are louder than their logic. So next time you're in a winning position and your finger hovers over the sell button, pause. Ask yourself, am I acting from fear or from plan? If it's fear, breathe. Step back. Let the market move without you trying to control it. Because the greatest profits don't come from better indicators. They come from better emotional endurance. The stock doesn't care about your feelings, but your future self will thank you for not giving in to them. This is the art of patience. This is the mindset of mastery. This is day trading psychology. So remember, any trader who hasn't trained their mind will always sell good stocks too early. They fear the pullbacks. They fear losing what they have. They believe in quotes like, taking profit is never wrong, but they forget. Taking profit too soon is how most traders stay small. The market rewards the ones who can sit tight, who can hold through noise, who understand that true discipline isn't exiting quickly. It's trusting the process long enough to let it work. If you're serious about growth, train your mind before your strategy, because the better your psychology, the more the market will reflect it. Thanks for watching Day Trading Psychology. Stay patient, stay present, and let your winners run.